Definition of smart money tactics. Smart money tactics refers to the strategies and practices used by experienced, knowledgeable investors and traders, often institutional investors, hedge funds, or wealthy individuals, who are thought to have better insights and resources for making profitable investment decisions. It involves making well-calculated moves in financial markets, managing risks, and maximizing returns by following trends and market signals that are usually not visible to average investors. Ever wonder how the ultra-wealthy consistently multiply their money while the rest struggle to keep up? The secret lies in smart money tactics, a strategy that puts everyday investors miles ahead. In this video, I'll reveal how you can harness these insider techniques to make your money work for you and unlock financial freedom. Welcome to Prince Sam Official, complete step-by-step guide to mastering smart money tactics. Step 1. Understand market sentiment. What is it? Market sentiment refers to the overall mood of investors towards a particular market or asset. Smart money, which refers to institutional investors and seasoned traders, always pays close attention to market sentiment to gauge the direction of asset prices. How to use it? Use sentiment analysis tools to track how the market feels about stocks, bonds, commodities, or other assets. Look at indicators like the VIX, volatility index, or put/call ratios to understand if the market is fearful or confident. Tip: smart money doesn't follow the crowd blindly. When market sentiment is extremely bullish, they may look for signs to sell, and when it's overly bearish, they may find buying opportunities. Step 2. Follow the big players. What is it? Institutional investors, hedge funds, and other major players often have access to better resources and data. Tracking where they're placing their bets gives insight into potential profitable moves. How to use it? Use platforms like Whale Wisdom, Grow Focus, or 13F Filings, a quarterly report filed by institutional investors, to track their investment portfolios. Tip: follow the stocks or industries that institutional investors are heavily investing in, but always analyze them yourself before jumping in. Step 3. Diversify smartly. What is it? Diversification is about spreading your investments across different asset classes, stocks, bonds, real estate, etc., to reduce risk. How to use it? Don't just stick to one sector or type of asset. Allocate portions of your portfolio to different investments that don't react the same way to market conditions. For example, when stocks fall, bonds or gold might rise. Tip: use the modern portfolio theory, MPT, to diversify based on risk tolerance. Higher risk assets can be balanced with low risk options like government bonds or dividend-paying stocks. Step 4. Risk management. What is it? Smart money knows that minimizing losses is more important than chasing gains. Risk management strategies protect your portfolio when things go wrong. How to use it? Set stop-loss orders to automatically sell an asset if it drops below a certain price. This prevents emotional decisions and minimizes potential losses. Also, consider position sizing. Don't bet too much on any single investment. Tip: a general rule is not to risk more than 1 to 2% of your total capital on a single trade or investment. Keep your portfolio balanced and don't go all in on any high-risk opportunity. Step 5. Long-term vision with adaptability. What is it? Smart investors think long-term but stay adaptable. They don't panic during market downturns. Instead, they see them as opportunities. How to use it? Have a clear investment plan that accounts for the long term, focusing on consistent, steady growth over time. Keep an eye on global and industry trends, and be ready to adjust your strategy when the market changes. Tip: learn to ignore short-term noise. Markets fluctuate, but wealth is built over years, not days. If a company has strong fundamentals, hold on to it, even during market dips. Step 6. Leverage technology and data. What is it? Smart money investors heavily rely on technology to get an edge. This could involve algorithmic trading, automated investing platforms, or sophisticated data analytics. How to use it? Take advantage of apps like TradingView for chart analysis, or use robo-advisors for algorithm-driven investment management. Stay updated on artificial intelligence trends, which are transforming how investments are managed. Tip: Using technology doesn't mean handing over control. Stay informed and use data to validate your decisions rather than replacing them with algorithms. Step 7. Keep emotions in check. What is it? Emotional investing is one of the biggest downfalls for individual investors. Smart money stays calm and sticks to the data, even during volatile market. How to use it? Create a plan and stick to it. Use strategies like dollar cost averaging, where you invest a fixed amount regularly, regardless of market conditions. This helps avoid emotional decisions based on short-term market movements. Tip: smart money doesn't panic during market drops or get overly excited during booms. Keep your emotions in check by setting clear goals and sticking to your strategy no matter what. Step 8. Stay educated and adaptive. What is it? Markets evolve, and smart investors never stop learning. New trends, technologies, and economic shifts require constant adaptation. How to use it? Regularly update your knowledge through books, financial news, webinars, and courses on investing strategies. Follow experts and professionals for new insights. Tip: dedicate time every week to research and learning. The more informed you are, the better you will understand the movements of smart money and the markets overall. Starting a kids' wear manufacturing business might seem like a big task, but with the right research, strategy, and passion, it can turn into a rewarding and profitable venture. Whether you're sewing each piece by hand or managing a factory, remember that quality, creativity, and safety are your top priorities. So, get started today, and let your designs become the next favorite outfit in every kid's wardrobe. Now that you know how the pros invest, it's time to put these tactics into action. Let me know in the comments which step you'll be starting with, and don't forget, knowledge is power only when applied. Thank you for watching this video on smart money tactics. If you found this information valuable, be sure to subscribe to Prince Sam Official for more insights on wealth building strategies. Hit that notification bell so you never miss out on our latest content. And remember, Prince Sam Official loves you all. See you in the next video.